Raising funding for your startup is a challenge. How much should you raise? Where do you find investors? And how do you pitch them? In this segment, How to Raise Funding for Your Startup, we'll answer those questions and more. Here are live outtakes with startup founders on how to raise funding. I hope you enjoy this episode. Hey folks, welcome to the Investor Connect podcast, your go-to for all things funding and innovation. Today we've got Derek and Michael spilling the beans on their quest for funds. In this episode, we talk about how 10 Capital works, helping folks like them connect with investors. We've got a solid track record of making things happen. In our chat, Derek and Michael break down 10 Capital's deals, simple fees, and a big network of investor pals, particularly in the dynamic fields of healthcare, women, and children's health. The guys also share how they're mixing things up with their funding plan, using convertible notes and preferred equity. Stick around for the good stuff. We're getting into the FDA journey, revenue plans, and how their cool product fits into the healthcare puzzle. This episode is all about great deals, how to meet the right cash, and it's going to be a ride. Hi, Derek. Hi, Michael. Thanks for joining.
Hey, sir. My colleague, Derek Brunel, is here with me.
Great. Yeah, looking forward to catching up with you guys and learning more about where you are with it, and glad to tell you more about 10 Capital. Where would you guys like to start?
Yeah, well, first of all, you can tell we got the same logo, so you know we're on the same team. So there you go.
There you go.
I think it'd be great to hear about 10 Capital quickly, then I can kind of frame where we are and then see what the synergies might be.
Sure. So, 10 Capital, what we do is investor relations and introductions. We help find more investors for your deal. 60% of our deal flow is life science, 40% are tech. I've been doing this for 12 years. Originally in Texas, now around the country. And at heart, what we do is take your deck and go out to our network and say, here's a great deal. See who's initially interested. You get, several hundred contacts out of it, but now we have to go through the process of educating about the deal, qualifying, and working our way through that list. And we do that through online events. We do that through follow-up mailers. And then later in the campaign, we go back and we go through and do in-person events. Who wants to learn more about us? And there's clusters of interest, usually in LA, San Francisco, New York, Austin, and a few other places that we go to. So you're not going all over the country. You're going to, certain regions where there's usually interest, and we do in-person lunches and dinners there. We're a monthly retainer. It's $3,000 per month for a 3-month commitment. After that, it goes month to month. We've got a great track record of funding deals. People that come in and get a campaign score of 90, have a 90% chance of raising funding through our program. So those who are active and have a good deal raise funding. The reasons people don't raise funding is if they don't have a market rate valuation, or they don't follow up the leads. They just get busy with something else. So this is what we do and how we work. What questions did you have for me?
Well, no, I think that's great. So first of all, I hear kind of flat fee, and that gets access to all of the investor network, no additional marketing or documentation fees or anything else. Obviously, we just have some type of now, does 10 take any commission off of that raise, or just a $3,000?
Just a $3,000. We don't have a FINRA license. There's nothing on the back end. Chose not to go the broker route because I had angel groups and VC funds in my network, and they don't let brokers in the deal for the most part. So we just go without that. The only additional fee may be if we do an in-person dinner, we do have to cover the cost of the food.
Sure.
Some people like the nice restaurants, others like the lower cost things. Sometimes we get law firm offices that foot the bill because we got all these investors in their office, but there's different ways to handle that for sure.
Yeah, right. Well, Derek, jump in here too. So I think that's, and so your network, angels, family offices, VCs, you said primarily the majority of which have a healthcare background or focus from an investment perspective?
I'd say a third of them are healthcare, life science focused. 50% are technology enabled, and then the rest are everything else: consumer product goods, food and beverage, alternative energy, that type of thing. So it is a good sized network of investors that are in the space. We also have about 50 angel networks, of which 15 are specific to life science, and then the rest are generalist groups that also do life science, but that's not their main thing. So that's how we work with this, is we go out and we do go through the angel process as well. There's good money to be had from the angel groups, especially those that are very familiar with the space.
So let me just kind of transition and weave in a little bit of what we're looking for. So we have, as I think I just responded to you, we've raised about $4.5 million. Okay. The company is relatively early stage, but the technology is not. It's about 20 years. We're about 9 months, maybe 6 months away from being a commercial company. Okay. I myself come at this from having been 25 years in the life sciences, over 15 years as CEO, taking a company in the autism testing space from startup to commercialization to exit, raising over 60 million or so venture capital. Derek comes from the venture debt banking and the large banking side, equity contacts. So we're kind of running a dual process here with the 4.5 million we've raised. They're all existing convertible notes. No preferred equity has been issued. Okay. So we currently have about 800,000 of a 2.5 million note left available that we're looking to fill out, pitching to US Angels, other people, kind of fits that network of yours. But then also looking to close on 3 to 5 million of a preferred equity that would essentially be the qualified financing to convert all the notes. Okay.
Right.
So question I have is, would you see 10 playing one side of that process or another, or being able to contribute to both?
I think we can do both. One thing we like to do is go out with a convertible note because we want to just start picking up checks. But along the way, you meet people that say, I don't do convertible notes. I need a priced round. Okay. So in that case, for you, we'll have that discussion and we go and we look at that priced equity money that you have over there, and then go through the negotiation process to figure out what that price is going to be and convert everybody over to it. So we're, in one sense, we're always looking for the lead investor who will make a price round out of it. You just don't know if they're the 5th or the 25th or the 50th investor through the door. And I like to pick up checks from people along the way just to show there's other investors there's interest in the deal.
Mm-hmm.
What's the valuation on the convertible notes?
It's a valuation cap. It's a 12 million valuation cap pre-money, which I think puts us into a market range. But again, that's only a valuation cap, not a priced round.
Right. Okay. That's fine. And people are very familiar with it. As long as your numbers are in there with everybody else, it's really not an issue.
20% discount to the equity round, 7% interest. Right. So.
Okay. That sounds good. Where are you on that path?
FDA pathway, Michael?
So we're going to take a dual approach. We're going to go both CLIA and FDA. Okay. And the reason for that is because I ran a CLIA lab for 12, 15 years. We will be 6 months away from having CLIA validated laboratory developed tests that gets us to be a commercial company generating revenue. Okay. And then as part of the 5 million use of funds, we would start the FDA starting first with a breakthrough designation going to IVD, because what's really interesting about the deal is there's potential therapeutic compounds that can be tied with the test to be a companion diagnostic and a companion therapeutic. So, and ultimately, we see this test as a consumer access directed test, right? Where you can actually be selling this test without a doctor prescription.
Right. No, that's great. Yeah, we see some of that from time to time where we're going out and starting to generate revenue now, gather data, and then go do the FDA thing. It makes it a lot easier when you have revenue, do that process. You have people that are using the product, and there's lots of things that come out of that are very beneficial. So that's a valid path. So yeah, it sounds like it's a good deal. What kind of revenue you think you might generate in the first year?
5 million first year is predicated on 6,800 tests, which is easily doable in this market. The initial market is going to be 1.4 million women that have one child diagnosed with autism. Okay, so 6,800, very small percentage market share capture on that at $750 per test, which puts us at about a 25 to 30% discount to what our market research suggests that women are willing to pay.
Okay, cool. That makes sense.
So that's 5 million. That would give us 5.1 million in the first year on the market.
No, that's good money. Yeah, that would help a lot for sure. And investors really like that. Validation comes in very quickly with it. What's the exit strategy here? When would you sell?
I'll give you two or three different scenarios. Okay. Because if you look at the revenue projections, which it gets us to about, let's say 30 million, 50 million in year 4, let's say 2028, a good 4 to 6x trailing 12 months gives us a $300 million valuation. That's a very good IPO-able strategy at that level. Okay. That's also pretty interesting from a acquisition perspective with a LabCorp, a Quest, somebody like that. But the third piece, so the first piece is IPO, second piece is a trade sale. Third piece is partnering with those pharmaceutical companies that ultimately gives them a much broader market access of their drug. That will then pitch us up, in my view, up above that $500 million round. And that could be a purchase by a pharmaceutical company.
Okay. All right. No, that sounds good. How many months after this round do you think that would be the acquisition? That 2, 5, 10 years out?
No, I would say from a trade sale perspective, what an acquirer is going to want to see is third party reimbursement traction. Okay. Nobody's going to buy, not nobody, but until this is a consumer test, they don't put a lot of confidence in your revenue model of a consumer pay. Okay.
Right.
So they want to see when it's a physician prescribed test, they want to see third party reimbursement. Okay. So that will be in year 2 or year 3. We're going to start to work with some major payers starting in the first half of next year to do some pilot studies into what are called employer sponsored health plans, right? These are the big companies, the Apples, the Adobes, the Amazons. These are the people that provide health insurance for their employees. They're going to be our first insurance reimbursement channel.
I got you. Okay. No, that sounds good. Sound like you got a good channel there for the market to get into it. So I think that sounds like a good deal for our investors. It looks like you know your numbers and you've got a clear FDA path. What they want is very clearly defined path. We know exactly what we need to do, when we need to do it, and so forth. So it sounds like you have that.
Well, the pro forma has the costs laid out for the FDA plan. It's got the timing. It's got the launch plan with respect to my head of commercial has been doing this for 20, 25 years, ran newborn screening at PerkinElmer. Our marketing person has 18 years into diagnostics with big companies like BD Biosciences, CareDx. I've been 25 years in healthcare, 15 years in autism testing. Again, managing a board. Derek's been on the financial side for over 20, 25 years. So I think we got a great team. Our vice chairman launched the first therapeutic antibody, so we have good therapeutic experience. Okay, one of our board members was a previous CEO and chairman of Becton Dickinson, which is a Fortune 10 company. So we got great advisors, we got great board members, we got a great team. We know what to do with the capital, and with some good investors, we can really make something out of this deal.
Yeah, that sounds great. Love to see a pitch deck and so forth. Did you have any questions for me about 10 Capital and what we do?
No, unless Derek does. I'd love to get a little.
I just had a question on just the process. So, let's say Michael and the board decide to move forward with 10. What's next? What do we expect? What's your involvement? What are our obligations?
Sure. So if you signed up today, you put in the first payment, we would have an onboarding call tomorrow. The goal is to get the intro mailer out in 1 week. The intro mailer is just a summary of the deal with the deck attached that we send out to the network to have them figure out what they want to do. There's intro, pass, follow buttons on it, and then the deck and the website they can click on. And that's what we measure, who's opening it, who's expressing interest in it. It takes about a week and a half to go through all the lists and get the results out. We then do an ad hoc meeting where you get to pitch to some investors. We find that's a great way to kick it off, make sure we get the decks ready to go and our pitch is up to speed. Typically, we get 15 minutes to pitch and answer questions. So we're looking for the 9 to 10 minute version of the pitch with 5 to 6 minutes for a Q&A from the investors on the panel. We typically put 2 investors on the panel and the rest are in the audience. It was just taking too long for people in the audience to turn on their microphone and their video. So we just set it up that way. So we go through several of our online events. We do 5 a month, and then we start to go through our angel networks and pitch to them as well. And then we start to we start to generate a list of interested investors who've talked to you. And in month 3, we start moving into what we call in-person meetings. We find that, for the smaller checks, 25, 50, 100K, that can come in over the Zoom. But if it's bigger, they usually want to talk with you. And so that's why we poll everybody who wants an in-person event. And we find they're usually concentrated in different parts of Texas, Southern California, Northern California, New York, and a few other places like Chicago. And we set up in-person dinner events for the investors who really want to hear the pitch, and you move it to close. I've heard many people tell me it's been easy to open up the dialogue on Zoom, but it can be hard to close if the dollar amount's higher. The smaller, like 25, is really not an issue, but the higher ones become an issue. So we offer in-person events as well. And then we continue on through our program. We have about 5, 6 other kinds of events we do. Investor update events, one of our best ones. If you're doing an online investor update to your current investors, we like to add our investor prospects onto that call. Find that that's a great way to showcase the team and get people signing up, because they get a vision of what you guys are doing. Not just the CEO, but the rest of the team is in there as well. There are investors in there talking about what they like about the deal. And that can be a really great event. It's really easy to do if you're already doing online presentations to your current investors, is what we do. We also do custom events where we bring a thought leader in, have them talk about what the trends are in the industry. That attracts more people into it. You don't get hundreds of people, but the people you do get are very specific and focused on this area. We have a physician syndicate. There's about 1,000 in there now. And then we're doing a partnership with Angel MD. Our next event's at December 5th, where we'll invite physicians to come out and look at the deal. And in some cases, people are looking for physicians to be a part of an advisory service. We're going to come in and give you coaching, or we're going to do a survey evaluation of the product and give you a nice report to hand out to other physicians or investors. Most people have 5 to 10 physicians on their cap table. They're looking for more, because they can be very helpful. So we do a lot of work in the physician area with Angel MD. They've got 25,000 clinicians that come to these events. So anyway, those are some of the things that we do in our program. Most people are in the program about 5 to 6 months. And so, because they're not just raising 500K, they're raising more. But that's the main deals we have going. What questions did you have for me?
Are there any like referenceable success stories in the life science space that you could share, or we could talk
I can put you in touch with some people that we've talked to in the past. I'll send you an email afterwards that has our testimonials page. You'll see a variety of different things up there, med devices, therapeutics, and so forth. I'll put you in touch with, say, William Noss of Pulmotech, who raised funding from us. He's glad to take the calls, tell you about how it went down and the money they raised and so forth. And then we'll send you a proposal probably tomorrow, the next day, that you can look at, take to the board, and see if this is something you want to do. Fleshes out the program in a little bit more detail than what we did today.
So, and if let's do a fact scenario. Let's say we did go forward. Let's say we launched this next week. We got Thanksgiving coming up. Christmas coming up. We got JP Morgan beginning of the year. What do you see transpiring in the 3 weeks of December, and then like the first couple weeks of January?
So the first 2 weeks of December are full bore. Everybody's working on it. Very little is going on in the last 2 weeks. So we basically take that off, and then we come back at the beginning of January. Anybody's campaign goes over the last 2 weeks of December, we just automatically add that on to the end of your campaign. So the first 2 weeks, we'd basically be building the list of initial investors' interest and getting the first pitch event in, and then we would have to take off and come back in January, because there's just not much happening there. But like I say, you don't lose any money on it, because we'll just give you 2 weeks on the end of the campaign to make up for that.
The investors that you're working with, I mean, do they, I guess, reliably see your network as a source for deal flow, or is this just, I don't want to say this in a derogatory sense, but is this like spammy, and are people just getting blasted?
No, we have investors
how do we
have a core group of investors that they're looking for us for deal flow, because they know us very well. And then we sometimes reach out to the edges of the network where it's new people that are coming in. I will say we don't get a whole lot of VCs coming in this time frame. They just have a hard time raising money from limited partners. So we're mostly going after angels and family offices. And these are people we've known for some time, especially the angel groups we've known for many years as well.
How about the family
going
offices?
After the VC space, that's been a bit of a challenge here recently, because a lot of people are not wanting to make capital calls to the limited partners.
Our deal seems to, or perceptually seems to, resonate with family offices, women's, children's health, autism. What's kind of your reach into that market?
What we have is, out of 18,000 investors, a third are VC, a third are angel, a third are family office. So substantial family office list. I will say that every family office is unique and they each have their own tearabouts, their own impact that they want to go after. And if you align with their impact, this is going to go great. So for those who are into women's health, children's health, and so forth, this is going to be a good thing. And I would kind of cast it that way, a little bit broader than just autism, because they may be a little bit broader if we can use family terms on there.
Yeah, family health, family planning.
Family health is a good one to put in there as well. Yeah. Women's health is a good one.
On the material that you use, would we be able to obviously work with you on that, developing it, and then use that for other non-10 fundraising purposes?
When you say use it for other purposes, what was that?
Well, I mean, we're talking, we might have investor contacts outside of your network. We'd like to repurpose can we repurpose some of the documentation we'd be generating?
Yeah, sure. You can take the material and use it as you like. Typically people have other things going on. We're not exclusive. You can do anything you want with the leads. Some people pass them to brokers and they do all kinds of things out there, but still you're happy to use all our materials in whatever way you like.
Okay. Well, I'd love to see a proposal. I'd love to see any other testimonials. Be great to talk to somebody. I mean, I think we're probably in a place where, again, we have the ability to bring in checks soon because of the notes, right, that are currently open. We got the term sheet. We got everything's there. Everything, we've got the legal counsel. I mean, we're raising money every day, right? We're running a company. Key thing is to, complete this process and give us some money to create some value for these investors, right? So,
yeah, no, it sounds like you have all the elements they need. Look for, good IP, clear FDA path, strong team, good sized market to go after. So these are the things that they look for, and it sounds like you check the boxes there.
Okay, well, shoot that over to us, and we'll follow up and get back to you soon.
Okay. I'll send that short email now, and we'll send the campaign proposal tomorrow. And I'll put in the email the contact to William Noss, so you can reach out to him. If you have trouble reaching him, let me know. I can get him on the phone for sure.
Perfect. Sounds good.
All right. Sounds good.
Hey, thanks.
Thanks, guys.
Talk nice to meet you.
And there you have it, folks, a deep dive into the world of funding, strategy, and innovation. We've uncovered the ins and outs of Derek and Michael's journey, exploring the potential partnership with 10 Capital, and navigating the exciting landscape of healthcare, women's, and children's health investments. As we wrap up, consider this your invitation to join the ongoing conversation. Do you have questions, thoughts, or experience to share? Head over to our website or drop us a message on social media. We'd love to hear from you. Remember, the Investor Connect community is all about collaboration and learning, so let's keep the dialogue going. And don't miss out on future episodes packed with more inspiring stories and valuable insights. Hit that subscribe button, and if you enjoyed today's episode, share it with your fellow innovators and dreamers. Until next time, this is Halty Martin signing off from the Investor Connect podcast, where great ideas find the support they deserve. Cheers to your success. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.